Hey everyone, this is Brandon, your trusted realtor, and today am coming to you with another amazing episode. I have the pleasure of talking to David.baca with Guarantee Rate Mortgage, and today we're going to spend some time talking about renovation loans and the power that they offer to you as the unknown consumer. Hey David, how are you?
Good, good. Thanks for the invite today.
Thank you. Thank you for the time and for joining. So, what I want to do is we like to spend some time here really demystifying the real estate transaction and giving people more information than what they otherwise would have known from their street realtor or their next door neighbor. So, in this case, you specialize in renovation loans. Can you give us a little bit more about when an individual in your experience uses a renovation loan?
Thanks again for the opportunity to hang out with you this afternoon. So, in addition to the full menu of basic products, I also work on renovation loans. And the way our company is structured, there are only a few specialists that do both. And what that means is that everybody understands the basic loan program today. But to move on to a renovation loan, there's more details. So our company wants people that have additional training and work often in this field. Therefore, they are likely and hopeful that the experience for the consumer is going to be better. It's going to be more fulfilling, and we're going to have more information available for them. And we do, as a matter of fact. So renovation loans, whenever you're talking to somebody about renovation or construction lending, there's a construction permanent kind of loan that's a similar concept. But you always want to be asking that loan officer, how often do they work in this kind of a loan? How long have they been doing this? And really what you're looking for is a loan officer that can say to you that I've got active files on my desk every day. And that's really how you as a consumer end up getting somebody that can take better care of you than somebody else. And the difference is that, let's say my company offers renovation loans, right? And let's say another bank down the street offers renovation loans. There, as a loan officer, you may do one or two of these a year if you're not a specialist. So if you're talking to the other bank and you're talking to that LO that's done one or two in a year, they may not be up to speed on what information they need to be providing you. So you want to avoid that type of situation. And again, whether you're talking to me or somebody like me, you want to make sure that they're doing this often. And that way, you'll get the best possible opportunity.
And so, a question I have for you is when it comes to doing these often, do you find that an individual, when they come to you and they want to do a renovation loan, they have a clear sense of what's involved? So, can we talk about the steps and when it relates to getting a renovation loan? Because you can get them on the front end when you want to buy a property, but you can also get them on the back end when you refinance. Can we talk about both of those instances?
Yeah, we can talk about that. And in fact, the best thing on earth is getting it as a refinance. And we all, so here's why. It takes time to get the project figured out with your contractor, and it takes time to figure out a contractor, right? So if you're trying to purchase a property, especially in today's environment, markets vary throughout the country, right? But there are a significant number of markets throughout the country that are overwhelmingly busy, and transactions are closing very quickly, and there are multiple offers. So if you're trying to buy a property in my market, and I'm in Maryland, I do business in 13 states throughout the country, but let's talk about where I sit physically. If you're thinking about making an offer on a property in Maryland, you're likely to have at least a handful of other offers to compete with. Mm-hmm. And if your offer comes in and it says that you're going to get renovation financing, there's probably a better offer out there for the seller to pick, because it takes a little bit longer to get a renovation deal to come together. And if the property isn't damaged and you're just looking at renovation because you want features upgraded, then the seller's not going to sit there and wait for you to do that. That being said, you could buy the property using a regular loan and then down the road do a renovation refinance. And the benefit of doing that is that it gives you time to think about your project, think about what you want to have done, and then find a contractor to do it. That second part is not easy, and it's time consuming. Mm-hmm. It takes time to get a contractor to answer the phone, to come out to your property, and it really takes time to get them to put something in writing. And if loans are closing around here in 30 days or less, that contractor piece in and of itself might take 30 days. So it doesn't fit in well with a purchase. But if you're already in the house and living there, then it's great. And most people, when they're looking at renovation loans, it's not because the property is damaged. It's because it's just not up to date. Sorry. So the house I live in, I moved in here almost 6 years ago and said that kitchen has to be renovated. The kitchen works just fine. It did work just fine, and it still works just fine, and it still has not been renovated. So same for the master bath. It works just fine. It's just not to our liking. Well, it's not terrible because it's 6 years later and we haven't done anything about it. So the idea is you have more time to make these things happen. And, and then once you're in the house for a little bit, you get a sense of what you really want fixed and what you might not want fixed. In other words, something might not be the problem that you thought it was, and something may be beneficial to fix. In this particular house that we're in, we've done things to it, just not the things that we originally thought we were going to do. Mm-hmm. So once you're in a house for a little bit, the importance of a certain change can vary. And, we did a lot more stuff outside than we hadn't imagined any of that at all when we bought the house. So living in a house and then fixing it up tends to be the best possible scenario.
So when it comes to, and you mentioned some of the challenges of finding a contractor, I can only imagine that you probably stay out of the world of making references. What has been your experience with your clients with finding a contractor? What's usually the time frame for them to secure someone?
So we're not allowed to make any kind of recommendation at all relative to a contractor. We can't even tell you if we've worked with somebody before. Mm. So there is no such thing as an approved list. And we need to stay as far away from the choice of a contractor as possible.
And would that be a red flag, by the way, if a buyer or consumer is talking to a lender and they say, hey, I have an approved list of contractors?
So most of the renovation loans that we do come from the government via Fannie Mae, Freddie Mac, or FHA. And all of those institutions are really strict now about keeping the lender out of the mix and not allowing them to make any kind of recommendation. If it's a portfolio lender where they're using their own money and it's not being underwritten to Fannie Mae and Freddie Mac and FHA guidelines, then they may not have that requirement and they may well have an approved list.
Okay.
So it's more a function of the loan type and the institution that you're dealing with. So it may or may not be a problem. I don't see that as necessarily a problem as long as you can determine that you're comfortable with the contractor and their references. But you do want to talk to 2 or 3 people that they've worked with before and make sure that, it turned out well, that those consumers were also satisfied with what they were doing. But again, on our side, we're not allowed to provide you with anybody. So, those contractors can be found online now. That's kind of easy. And there's a certain amount of vetting that goes on there. So that's not a bad source compared to what we may have had 10, 15, or 20 years ago. Certainly, their favorite realtor is probably going to have some contacts that would be beneficial for them to explore. So and of course, if you have friends that had a transaction or a project, and it went well, you'll want to know who they worked with. Our favorite contractor came from they were working with a neighbor across the street some 20 years ago, maybe longer, 25 years ago. We liked what he was doing there, and he's still our favorite contractor. So that tends to be the best possible place to find a contractor, is that somebody else already had a good experience with them, somebody that you know.
The power of word of mouth goes a long way. 25 years, apparently.
Yeah, right.
So if we could, so it sounds like if someone's already in the house and they are looking to refinance, it sounds like that's going to probably be the best of a lot of different scenarios, especially in the seller's market where there's very limited inventory. People have to get into a neighborhood specifically, especially for a school district. But like you said, the home doesn't really have the updates or the renovations they're looking for. They can get into the home and then say, hey, they can call you, David, and say, I'd like to get the additional kind of scope of work to renovate this property. What are some of the criteria? Because I know a lot of people will be thinking, well, this is probably like a 203K FHA loan, but we've kind of moved a little bit past that, I would think, right?
They're all very, very similar, and they serve different functions. And so generally speaking, the choice between a conventional loan and an FHA loan are often a function of credit score, because conventional loans raise the cost as the credit score goes down. They call that risk-based pricing. And FHA is already probably a more expensive loan than a conventional loan, until your score gets under 700, let's say. Once your score moves into the 680, 660 range, then FHA becomes a better choice. And that's the primary reason one picks FHA or conventional. So credit score is the first factor that becomes significant. The second factor that becomes significant is that FHA tends to allow a higher debt to income ratio. So why would somebody pick FHA over conventional? Maybe they need a debt to income ratio that exceeds 50%. FHA allows that. Not all lenders do that, but FHA does allow it. So same thing when you're talking about a renovation loan. Those qualifying factors are how you'll choose between a conventional renovation loan and an FHA renovation loan. So
perfect. So with an FHA loan, someone can refinance their existing home and use FHA and use the 203K program?
Yep, they can. So the other reason that you might pick conventional over FHA is if your house happens to have more equity in it, then the mortgage insurance cost is likely to be lower with a conventional loan. And in all these scenarios that we're talking about, no requirement to have 20% equity. The conventional loans require 5% equity and FHA requires 3.5% equity. But for example, let's say you've got 10% equity in your house after the project is completed, and that'll be a good thing to talk about is how we determine value. But let's say you've got 10% equity in your property and your credit score is above 700, then likely you can put together a better monthly payment using conventional than you would with FHA. So the value that we're referring to is the value after the project is completed, which means we're looking at the value of the house today, and we're looking at the project, the contractor proposal, and we are then saying, once this is done, even though we're just looking at it on paper right now, once this is done, this is what it's going to be worth. And an appraiser can appraise a property without all the physical items being completed. And that's something that a lot of people aren't familiar with. So the appraiser is going to look at the projected project and say, once this is done in this marketplace, this is what this house is going to be worth. And then we create a renovation loan based on that. And so your value may be going up significantly because almost anytime you do projects like this, when you improve, and most of the projects are improving the kitchen, improving the bath, flooring, windows, HVAC, all 5 of those things add significant value in the marketplace because they are what people want. They want that kind of stuff to be new. So it adds significant value. And you may end up with, let's say your house today is worth $250 and your project is $50, your value may end up being $325, $330, or $350. So it can happen that way. And then we can take advantage of that from a lending perspective.
Awesome. So you're not precluded. So from, as a consumer, using a refinance product to the potential valuation. The only thing that they are required to deal with up front would be the current price of the home and the cost of the project. And so would their out-of-pocket expenses be based off those 2 factors? So assuming the house is $100,000 and the cost of the project is $20,000, all in, we're looking at $120,000. Would their down payment amount for the renovation loan be based on $120,000 or the future value of the property?
Now it's based on, if it's a sale price, if it's purchase, the 100 is the purchase price and 20 is the improvements, then the down payment is based on the 120. If we're doing a renovation and let's say the current mortgage is 100 and the improvement is 20, then again, it's all based on, the answer is that it's based on either the purchase price or current mortgage plus the project.
Okay, perfect.
Yeah.
No. Awesome. And so what's typically the time frame do you find for the construction for a renovation refinance loan?
So to get the processing done, right?
Yes.
So it often will take you up to 30 days to get the project identified. Mm-hmm. Our part, then, we can't do an appraisal until you've identified what the project's going to be. Even though we're doing an appraisal in advance before the work is done, we still need to know what the work is going to be. Right. So if you can't tell us what the work is going to be, we can't order an appraisal. So typically we'll tell people that we can get to closing within 30 to 45 days after being able to order an appraisal. And so at that point, you've probably spent more time than you thought getting the project nailed down. And that's really that's the most surprising part for people. They just don't realize how long that can take. And again, it starts out with the fact that it's just hard to get people to come out and be available to look at your project, tell you what it's going to cost, and then be available to do the work.
So this, I think, is just has been a really rich conversation because I can imagine that there are so many people who are living in their homes now, and especially in this market, whether they want to move or not, they it reminds me of that television show where they either love something or they end up listing something.
Yeah,
So
this is the perfect conversation around that. It really is.
it, re-
It's
it I was going to say, when people decide that they love their property and this is their forever home, sometimes the cost of maintenance, repair, renovation, improvements, and aesthetic enhancements are just outside of reach. Are there any disadvantages you could identify for the pessimistic consumer about using a renovation loan?
probably the only drawback is that the interest rate is going to be higher. So in today's market, if the conventional and FHA regular type of loan is around 3%, maybe a little bit lower, but let's just use 3%, then the renovation loan is going to be around 3.5%. So said another way, typically the renovation loan is about a half to 0.75% higher in rate than a regular loan. And so you need to be prepared for that. But the other piece of it is if you're using a renovation loan, there probably was no other way to finance the project. The first thing that people will think of if they've been in their house for a little bit, they might think about an equity line, which could be a great solution to create, money or funds to renovate. But they're going to need 20% equity today. So, and you might think of a cash out refinance. Again, you'll need 20% equity today. And you probably don't have that much equity, possibly. And you don't have enough equity to take out enough cash to fund the project. So the big benefit of the renovation loan is that it's lending on future value. In our $100,000 purchase and our $20,000 of improvement, the appraised value was essentially $100,000. But when you plug in a renovation loan and it gets to look at the $100,000 purchase and the $20,000 improvement, it might decide that the value after all that's done is 130, 140, 150, and you get to take advantage of that. Right. But that's not available in any other program.
And just to push that envelope a little further, what ways would a consumer be able to take advantage of that increase in their appraised value?
So here's a scenario that happens, often. Let's say you bought a house 2 years ago and you used an FHA loan to buy that house and you had mortgage insurance. And FHA mortgage insurance is kind of expensive. And let's say today you want to do a renovation. So let's say you spent $250 on the house previously and you want to do $100,000 renovation. And so with the current market being stronger, you may find, and with your project, you may find that the appraised value is such that you can move from an FHA to a conventional loan, which would, and if you even then don't have 20% equity, even if you still have some mortgage insurance, it's likely less expensive than what an FHA loan was. So said another way, in the process of refinancing, you may find a little bit lower cost structure because you've got some equity to work with.
That's, phenomenal. And I think that really underscores one of the prime and best, one of the really great examples of how an individual can leverage real estate in order to build wealth for themselves and for their family, because you are literally forcing the appreciation or the increase in the value of your asset. So at some point in time, if you choose to sell that in the future or even rent it out, you can either rent it for a higher cost because of the improvements that are made, or sell it and more than likely receive a higher return in your proceeds because of those renovations.
Right. So
Well, this is outstanding. I feel like I should be writing you a check with all this wealth of knowledge that you have provided. So, David, if people wanted to get in contact with you because they are smitten with this window in the background and your wealth of knowledge, how would they do that?
So my name is David.baca. It's BACA, and I'm at guaranteed rate affinity. Literally, you type that in and I'm going to pop up. My cell phone is a great way to reach me. I'm at 410-302-3620, and email is david.baca@grarate.com. But look online. It's probably easier.
Perfect. And what I'll do is I'll be including David's information in the description below. So you'll be able to reach out to him directly and ask any questions that you have regarding the process. Remember what I always say is that real estate is truly a marathon. It's about building those relationships, conditioning yourself along and before the process, so that way you can build a path and identify a pathway to success. My name is Brandon. If you haven't subscribed, make sure you hit that like button, the subscription and notification bell so you can stay tuned in and in tune to the latest and greatest realty in the DMV and everywhere else. And apparently with David, there's 13 other states that he can assist you with. So he has you covered. My name is Brandon. This is David, and I thank you so much for tuning in. Take care, and we'll talk soon.